Hello and welcome to this midday market mood check with me, Nandita Khemka, and my colleague Yatin Mota. Of course, what we are witnessing on the Wall Street, is very similar to midday, in fact, midweek blues rather, given the fact that we are seeing a triple-digit cut on the Nifty. In fact, it had slipped even below that 18,500 mark. It is a 500-point kind of drop on the Sensex as well, and the mid and small cap indices have also dropped in line with benchmarks. What's weighing down on the markets today is the entire banking pack. The Nifty Bank was down over a percent. In fact, index has slipped below that 44,000 mark. And if you look at some of the Nifty losers, you have the likes of ONGC, HDFC, NTPC, Coal India, despite that price hike has, fallen in trade. SBI goes ex-dividend. That stock was also down. Aside of that, private banks also not doing well. Axis Bank, Kotak Bank was also, I think, down when I checked last. Gainers, Asian Paints, Apollo Hospitals, after good commentary coming in from the management, that stock is up. Tata Motors, a good report coming in on Tata Motors. CLSA apparently has upgraded the stock to a buy rating, and after UBS report, the CLSA report comes as a breather for Tata Motors. That stock is gaining. BPCL on the back of a 4% slump on crude last night. We are seeing some traction here as well. HDFC Life post the block deal was up in trade. I'm sorry. So let's talk about Adani Ports as well. Stock was down, Yatin?
Yes. What I think is that earnings were satisfactory, but there is some profit taking in the stock. Obviously, people are also concerned about the auditor remark relating to the Hindenburg allegations as well as several disclosures. They have also taken a hit on the Myanmar port, which they sold as a significant loss. That write-off was evident in the fourth quarter earnings. Nandita, if you look at the overall markets, stock-specific action is still there. HDFC Life, as you mentioned, there was a block deal. Aberdeen sold their residual stake there. We also have Tata Motors, which is doing well. And in general, a lot of stock-specific activity in the marketplace. Adani Enterprises today is up, 1.5%.
The off day is low.
But in the last half an hour, Nandita, I think the MSCI rebalancing is something that we'll be watching out for, because there are buy flows in the last half an hour with respect to the MSCI flows, which are expected to be quite strong. And there will be a lot of price and volume action in the last half an hour of trade.
Right, we'll of course be getting you all that in the closing show. But for now, Apollo Hospitals, as I mentioned, was one of the top Nifty gainers, given the fact that, management has said that they expect Apollo 24/7 to break even by the fourth quarter of the current fiscal. In fact, they have said that they will be looking to raise $200 million and, dilute 5 to 7% stake in Apollo 24/7 pretty soon. So that's another thing that has come in from the management commentary. They also expect margins to be in the range of 15 to 16% by FY24 end, which is quite good. Aberdeen, the stake sale, as Yatin mentioned, is keeping HDFC Life buoyant in trade. Aside of that, Vedanta is slipping another 2 to 3%, given the fact that there are reports that the government may not approve funding for its chip factory with Foxconn, and that will come as a big setback for its chip unit plans, right? So on the back of that stock is down another 2 to 3%. Yesterday, remember, that stock was up down 5% on the back of the stock going ex-dividend, and of course some news flow on promoter pledge as well. ONGC remains the top Nifty loser on the back of brokerage is keeping a sell rating on the stock, and of course, as I mentioned about Tata Motors, top gainers, given the fact that CLSA has upgraded the counter to buy rating, the target price of 624 rupees a share. Let's also talk about some of the mid caps. Yatin, Mazgaon Dock, that was up 5% on the back of robust earnings, and Sona BLW is another stock that saw some action on the back of stake sale by a promoter entity. I think 3.5% stake sale by one of the entities, right?
900 crores worth of stock exchange in Sona BLW.
So that stock was down somewhere around 3 to 4%. Aside of that, what are the other movers?
So, Suzlon, obviously good earnings and good outlook with respect to FY24. The management to CNBC TV18 said that they'll be doing 6,000 crores of sales, which is much higher than FY23 overall. So good growth for the wind power company. Suzlon, that stock is up 12% right now. We also have CDSL, that stock has moved above the 1,000 mark, 5% up for that one. Technically, the stock is trading over the key resistance zone and probably headed towards a breakout. What's not doing well again is Campus Footwear, 5% down. Yesterday, stock was down 7% because of weak earnings. So that slide continues. RHIM Magnesia, That stock is down 8% after a dismal set of earnings. In fact, they posted a loss versus a profit. Obviously, there was a write down in one of the subsidiaries, Dalmia OCL, because of which the stock has been languishing in trade. Aegis Logistics, that stock is also down 5% along with Sona Comstar, wherein there was a block deal. So a lot of stock specific action. We also have sugar stocks which are correcting. So we have the likes of Renuka Sugar, EID, Perry, all of these stocks down anywhere between 4 to 5%. PPL Pharma, Uflex, Fortis also down in trade. So yes, today the market breadth is slightly weak. Almost the declines have been crossing the advances. In the morning, we were slightly better in terms of market breadth because the small cap index was holding higher. But now the mid cap index is in the red, and so is the Nifty Bank down by nearly 500 points.
Yeah, clearly it's a day of breather after 4 straight day of gains, and of course, with the Nifty also clocking in good gains above that 18,600 mark. But by way of cues, there's lots to watch out for, given the fact that the US debt ceiling deal will be voted upon by the US House. So that's one big cue to watch out for. We have the fourth quarter GDP numbers and FY23 GDP numbers coming out in the evening at 5:30 p.m. today. And expectations are, quite, the range is pretty wide. Expectations for Q4 GDP is from 4.1% to 5.7%. But the median expectation, which even CNBC TV 18 poll is throwing up, is 5.1%.
Okay.
And for FY23, that figure is expected to, come northwards of 7%. So that's what even RBI governor is expecting. So that's something to watch out for. Tomorrow is the 1st of June, right? So we will be expecting auto sales figures to come out. So lots to watch out for when it comes to cues when we open for trade tomorrow morning. But aside of that, anything you want to talk about when it comes to SEBI's discussion paper on the FPI issue?
I think it's just a discussion paper with respect to higher disclosures for FPIs or foreign institutional investors who have more than 25,000 crores in AUM or a concentrated shareholding. I think there is a need for more transparency and to acknowledge or probably ascertain the fact that whether or not the FPI is related to the promoter entities or a group of people, and how really does this impact the Indian market. So there is a question of concentrated shareholding by few of these FPIs, which require higher disclosure. So I think SEBI has become more vigilant, and they just want really to put a mechanism wherein there is lower risk for smaller shareholders. And when it comes to larger FPIs, as I mentioned, the threshold is about $3 billion or 25,000 crores in AUM. So yes, the exposure to Indian stocks, wherein we have higher FI holding, that needs to be scrutinized or that needs better disclosure. So I think this is a move wherein SEBI wants more transparency to come in with respect to FII and FPI shareholdings.
Right, it's just a discussion paper, as you said. We'll have to see how this pans out. Well, with that, I think we've come to the end of this midday market mood check. But tune in at 3:30 p.m. To watch all the action that happens in the last hour of trade. And of course, for now, it's a goodbye from me and Yatin. Thanks a lot for watching.